All right, Scott, time now for the Schoolsfirst Financial Corner.
I'm ready.
I love this. All right, this is why I love talking to Schoolsfirst Financial.
Yeah.
Because we're talking about something that I'm in the middle of.
Which is?
Debt.
Debt and credit. Well, Brittany Owens is here. She's going to help us out. She is a financial education specialist, so we've called in the specialist just for you.
That's what we need.
And for you. So welcome in. Thanks for being here.
Thank you for having me.
All right, so we're going to break down first and foremost. We've heard about reducing debt. We've talked about the use of credit and not using it. Break it down for us. I guess give us the first line. What do we need to be thinking about as it relates to debt and credit?
So the very first thing, when you're thinking about debt and credit, so for an example, to have a good credit score, you're gonna see better rates on your interest rates, auto loans, mortgages, credit cards.
Okay.
But without having a good credit score, you're gonna be unknown to those credit bureaus. And that's gonna result in having a lower credit score. So
All
we're
right.
gonna wanna make our debt and our credit work for us.
All right.
I like that. All right, how do we do that,
Yeah, so the credit bureaus, they use multiple factors to give us a credit score. The four that we're going to want to pay attention to is making our payments on time, having a low balance, keeping it below 30%,
Okay.
having a mix of credit, as well as your length of how long you've had your credit card. The most important you're going to want to focus on is keeping your balances low when you're opening your credit card. Keeping your balance low is going to boost your credit score over time.
When you say low, like 25% of the balance, or what if you get to close to 50? You don't want to go above that.
No, you're going to want to stay at 30%. So
Okay.
let's imagine we have a $20,000 credit card.
Got it.
We're going to keep our balances below 30%, which would be $6,000.
Okay.
You talk about, and something we all can use,
Yeah.
not just this guy here, but budgeting. And some people get a little bit fearful by it. They think Excel, they think long, crazy spreadsheets, tables and things. That doesn't have to be the case.
That does not have to be the case. A lot of times when people hear the word budget, they think of these negative feelings. But a budget is simple. It's you becoming the boss of your money and telling your money where to go. You can use multiple apps online. If you're not a tech person, you can use pen and paper, write everything that's coming into your account and what's going out of your account. You may be able to find that you're spending a lot of unnecessary money on coffee or eating out every single day.
Car washes or shoes,
Uh-huh.
things like that. Just
shoes
very
for me. But you're able to find those unnecessary expenses, eliminate them, and put some of that extra money towards your debt.
All right, I like how to do that. Yeah, whatever extra money you got, you don't want to put it towards your debt, but you really should. It makes all the sense in the world. All right, what about if you're using a credit card, but you're not really using it anymore? You've stopped using it for a long time, and you've kind of got the balance out. Do we close our accounts, or how do we do
You are
that?
not going to want to close your account.
Okay.
If you do have an annual fee on the credit card, you may want to close it. But if you are not having an annual fee on the credit card, keep it open.
Okay.
Because you're going to be losing that length of credit history.
Oh.
That is going to be 30% of your credit score.
It seems like if you paid it off, right, then you just want to close it, but then you get in trouble for that.
Yes.
I don't like that. I don't like that.
You don't like
No, I just want to get rid of it if I
I hope
pay it
you're
off.
taking notes.
I'm taking notes.
What about some other kind? I know we talked a lot about credit. What about other kinds of debt and mortgages and things like that people probably have? How are we supposed to think about those?
Yeah, so with with mortgages, auto loans, you can think of it, let's say you opened your mortgage when your credit wasn't doing so well. You can think about refinancing as your credit score increases. You're gonna find that you have a lower interest rate and you're able to have a lower monthly payment, saving you extra money as well.
That's how you do
Were
it.
you taking notes?
I was taking notes.
You're right here in
well,
the
I didn't have my
corner.
pen, but I got a lot up here right now. I got there's because there's a couple cards that I don't want anymore, but I'm gonna keep them open. I'll just keep it there.
Brittany told you.
Because Brittany
All
told
right.
me. All right.
Thank you so much. We'll
Thank
put up a
you.
little information. Schoolsfirst Financial Credit Union, over 60 locations throughout
Lots.
California. See the phone number, the website, social. Follow along and become a member. Schoolsfirst Financial Credit Union.